Hello, investors and traders, and welcome to the weekly market report. I'm AJMonte, Chief Technical Analyst with Sticky Trades. And I'd like to thank you for the participation that we saw on Wednesday during the rapid fire stock analysis session. We went over 50 stocks in 60 minutes, and we had an action-packed hour. Next Wednesday, we'll be doing the same exact thing. So if you're brand new to Sticky Trades and would like to learn more about that, just go to stickytrades.com, look into our rapid fire stock analysis session, and you can plug right in. Now, before we get into the charts, I'd like to start with some of the geopolitical news. You can see here that Apple took a big hit where China bans the iPhones for government officials at work, and the stock took a big hit. Now, the reason this is such a big deal is because Apple is one of those mega cap stocks. And as Apple goes, so goes the market, as they often say. And so that is number one. Number two, last week I was talking about manipulation, and we talked about the downward revisions that we saw in the housing market here. And I had a question that came through the comments field on YouTube saying, aren't revisions something that we normally see? And the answer to that is yes. But here's my big question mark. Why is it that when we have revisions, it's always against the market? So in other words, here from the Bureau of Labor Statistics, we see how the reports came out with the original reports showing January through July. And notice how they always revise lower. We don't see anything on the revisions that's going to be the other way. In fact, what I'm saying here is that they normally put out a number that is more or less absorbed by the market, and then they revise it later. And, I'll tell you something right now. If you were an accountant or a bookkeeper and you had to make this many revisions over and over and over, almost every single month where you were wrong, you'd be fired, right? But because this is coming from our government, it seems to be an okay thing. Look at the change in the revisions. This is not something that is, off by a couple of percentage points. Here we had in June almost 50% change in the revisions. July, 16%. So these aren't small little adjustments that are being made. These are big numbers that are coming through. And that's all I'm going to say about this right now. I will be reporting more on the manipulation that I see, especially with jobs and economic data with the GDP. But it was an interesting question, a very important question. I just had to point that out. Again, thank you so much for liking, sharing, and subscribing here on YouTube, especially if you go out and take that link and you share it on your social media pages. You're actually helping us build the eyes on our reports. And of course, as more and more subscribers come in, it actually helps more people learn about the technical charts and how we teach it. So with that said, again, thank you. And let's go to the charts. You can see here that on DIA, we hit the downside target. And if you had a chance to catch the midweek report, which by the way, I did post to YouTube, we don't normally do that. But again, we're building subscription base on YouTube. So I want to give the general public exposure to the accuracy of these charts, and we're hitting the targets left and right, especially last week. So we hit the downside target there, and in the midweek report, I said we could probably see a move back up to fill the gap and test that moving average, and that's exactly what we see here. The gap has filled, and notice what's happening as we reach that 20-period moving average. The volume is dropping as that moving average will most likely act as resistance. We have a drop in volume, but we also have a cross in the stochastic as of yesterday. So that is more or less a sell signal. So coming into next week, I'm going to draw this line out and still keep it down. I'm going to say that we're probably going to test the lows from Wednesday. And I'm being conservative there with the downside target of 343.98. So that is for DIA. Remember, next week is options expiration week, and that could have an effect on the markets most definitely. Now, IWM, I think we're going to see something slightly different. We see this long stretch of red that's known as a stale red light, and the volume is dropping on the way down. So what we saw in the diamonds with the rally back up to the 20-period moving average, I think we're going to start to see that in IWM as well. So I'm going to be doing a two-part forecast for IWM where I think the upside target will be hit probably Monday or Tuesday at 185.71. And then I think we're going to take out the lows by Friday, the lows from this week. So downside target in part two of that forecast is 183, exactly to the penny, 183. Now, if we look at QQQ, going in alphabetical order here, I did say that we would go lower on the Qs. We did that. We did see a slight rally in the Qs today. That is a shooting star, and we see a sell signal on the stochastic. So for the Qs, I am saying that we're going to break out below that 20-period moving average. So putting a downside target on the Qs at 367.47. Apple, again, being a big part of the sell pressure that's coming in on the Qs right there. So again, bears, keep your bear claws out. Option traders, get ready. I'm going to be rolling the short side of our put spreads to take in more cash. Just had to do a plug there for our option traders. And make sure that you're paying very close attention, members, to the member page on Sticky Trade's dashboard. Okay, so that is QQQ. Again, to reiterate, downside target at 367.47. Now for SPY, we hit the downside target on that as well, precisely as of yesterday. Downside target of 444.86. Again, another shooting star, or very close to a shooting star, drop in volume. And I think we're going to see a breakout below that 20-period moving average and possibly the formation or completion of point C on our ABCD pattern. So again, that downside target is 440.85. So $440.85. What am I talking about with the ABCD? Here's A. We pivoted at B. I think we're going to pivot lower to form C, which brings us to a lower D. ABCD patterns are both on the downside and the upside. See, we have an A to B, pivot lower to C, and then a lower D. We see ABCD patterns on the way up. A to B, pivot to C, pivot to D. There it is. We have a Sticky Trade University where we will be talking a lot about ABCD patterns and how they work on the way up and on the way down. ABCD, simple as that. Okay, so now we go to the VIX. Let's talk a little bit about that. The VIX filled the downside gap today. See that little gap down there? Remember, I tell people all the time, 100% of the time gaps fill. On the VIX, we came within 17 cents of hitting that upside target of 1586. What do I think is going to happen next week? I think we're going to see just a slight downtick in the VIX, and then I think we're going to rip right up, and I'm going to match that high with this high right here. That high is 1586. I'm just going to change that for you right now so we could make sure that that is matching 1586 right there. And that is perfectly matched. And therefore, I can get rid of that line to clean the charts up just a little bit. Now, I want to talk about silver. We are very transparent in the way I put out my silver forecast. And if you recall, last time I talked about silver, I said that I would be buying on that gap fill down there. On this day right here, which was on the 5th of September, I put a good till cancel order in to buy my silver at the limit price right there at the gap fill. And what happened is the very next day it opened up and I got a better fill. Hopefully those who are more or less ghosting my trading in silver got a better price as well. So now I am 100% back into silver, all in with the biggest position that I've had. Again, 100% back in. And now I'm looking for a rally back up. Now, my short-term target on SLV is going to be right there at that target of 2161. But I do believe it could get up to fill the gap up here. And I'll be keeping a very close eye on that, because if it gets all the way back up before next report, if it gets back up to 2220 and the volume starts dropping down below, I might sell out of 5% more of the position and continue to parlay it. Again, something that I do regularly to help people with trading silver and more or less just showing you what I'm doing. If you want to join in, great. It's not a recommendation, of course, because I don't know who you are. I don't trade for your account. I have no idea what kind of dollars you have in your account. Even if you are not trading with real money, you could track along with my trades. Even if you're not trading, you could track along with paper trades. That's a way to practice using the technical charts and following the signals. But it's a real fun one to trade. It's an ETF that's not very expensive. My son is actually trading along with me. You'll hear more about him as the weeks pass because he's joined the Sticky Trades team. And some of you will even get to speak with him and pick his brain on how he's learned over the years and following me and the charts. I started talking to him about the stochastics and bullish engulfing candles when he was a little boy, along with my oldest son, started teaching bullish and bearish engulfing candles and even teaching the stochastics. And so it's something that anyone can learn. Just put the time in, practice, and you'll have a good time with it. So thank you again for liking, sharing, and commenting. And we'll talk to you on the next publication. So long.
Ever wondered who'd win in a bull versus bear showdown, or how the power of AI could change the game for traders? Welcome to a brave new world of trading. Introducing Sticky Trades, the revolutionary system that's transforming the trading landscape. Sticky Trades brings together the precision of AI bots and the proven expertise of seasoned market analyst AJMonte to deliver unparalleled trading insights. While conventional trading coaches might rely solely on traditional methods, Sticky Trades seamlessly blends the speed and accuracy of artificial intelligence with human intuition and experience. The result is a trading system that's not just keeping pace with the competition, but outstripping it at every turn. And for those of you pondering our opening question, in a bull versus bear fight, it's nature's toss-up. But with Sticky Trades, whether the market is bullish or bearish, you're always poised for a win. Sticky Trades is where the future of trading meets today's top analysis. It's not just about predicting the market's next move, but understanding it. With Sticky Trades, you're not just following the market, you're ahead of it. So whether you're a seasoned trader or just starting out, Sticky Trades offers a revolutionary approach to trading that can help you navigate the ever-changing market landscape with confidence and precision. In conclusion, Sticky Trades is not just a trading system, it's a game changer. It's about empowering traders with the tools they need to succeed, regardless of market conditions. So why wait for the future of trading when you can experience it today with Sticky Trades? It's time to take the leap and redefine your trading game. Because with Sticky Trades, you're not just surviving the market, you're mastering it.